Hey everyone, Boris Musheyev here. Welcome to another training. And today we're going to talk about how to switch from the mileage rate to the actual expense method using your own vehicle. Basically, when can you deduct your personal vehicle for the business and what are your options? We're going to dive right into that. But before we do that, just want to let you know every Tuesday I release a tax strategy video here on YouTube. All right. So if you're not a subscriber yet, make sure you subscribe. Make sure you turn on your notifications so you get notified every Tuesday when I release a new tax strategy video that will help you reduce your taxes. And if you like the video, hit the like button. But really, let's get right into it. So, how to switch from the mileage rate to the actual expense method, right? Well, we're going to cover four things here, right? Number one, what is the mileage rate method, right? What is the actual expense method? That's the second thing. The third thing, when does it make sense to switch, right? First of all, I'm going to teach you how you can deduct your right, your personal auto expenses, and then which methods, right, actual or standard. Then we're going to talk about can you switch in between, when does it make sense to switch from one method to another, and how to switch from the mileage rate to the actual expense method, right? So we're really going to get right into it now. Before we get talk about what is the really standard mileage rate method, right? I want to kind of stop here for a second. I don't have a slide for it, but I want to take a step back for a second and answer a question. Question is as follows, Boris. If I am using my personal car, I've got a family, right? I use my car for the family, take my kids to school, go get groceries, whatever that is. But I also use it for the business. I go buy supplies, I meet with the vendors, I use it for the business as well. Can I deduct expenses, and how do I do that? First of all, the IRS actually allows you to deduct any expenses related to your business, right? Whether it is a direct expense or indirect expense, right? But as long as it is business related, it is deductible. So if you have a personal vehicle, right, and you are using it for the business, then guess what? You can actually deduct this vehicle for the business. And the IRS gives you two ways to do that. One of those ways is standard mileage rate method, and another one is the actual method, right? Actual expense method, excuse me. Standard mileage rate method, and here we are on the slide, right? It basically says, you know what? The IRS says you can deduct your vehicle expenses. You don't have to keep track of your receipts. You don't have to keep track of your expenses that you have for the car, such as the gas or the maintenance. You take it to the mechanic, your lease payments, your insurance. IRS says, don't worry about it. You are using your personal vehicle. You can deduct using the standard mileage rate. The standard mileage rate means whatever mileage that you travel for the business, you take that number and you multiply by the safe harbor, the standard mileage rate, right, so to speak, that IRS gives you. So in 2021, for those of you that are still doing 2021 taxes, you could have taken 56 cents per mile, right? In 2022, the mileage deduction rate was actually very interesting. I've never seen this, right? In 2022, you were able to deduct 58.5%, 58.5 cents, excuse me, percent, I said, 58.5 cents per mile, right? From January to June. As soon as the gas prices start going up, the IRS said, oh my God, our taxpayers, they need to, they pay so much for gas price. We should give them a deduction. Let's add another 4 cents per mile, right? Our generous government decided to do that for you. So they said, if you are traveling, whatever miles you're traveling from July until December, you can take 62.5 cents per mile. So in simple terms, whatever business mileage you travel, you multiply that by the 62.5 cents, right? If anything from July to December, anything from January to June, that's 58.5 cents. That's it, right? Now the IRS says, look, you don't have to keep track of your receipts. You just need to keep track of your miles. Keep track of my miles, right? I've got a busy life. I've got to take kids. I've got meetings. I've like one business owner I know, he said, you know what my title is in my business? He said, I am Chief Operating Fire Extinguisher. So you're probably that too, maybe sometimes you feel that way. It's like, now you want me to keep track of my miles? Unfortunately, IRS says, yes, you need to keep track of your miles in order for you to take this business deduction, right? Now, the old school way, you take the pen, and a notepad and a paper, and you keep it in your car. So every time you travel for the business, you have to basically put down, hey, I went from location A to location B. What's the miles and the purpose of the trip? Boom. Crazy kind of stuff they make you do. But unfortunately, with the way technology is going today, you can actually download an app and use it to do what? Keep track of your miles. They have GPS tracking apps. There's a lot of apps. There's no particular app that I would recommend, okay, that you can use. But if you can just Google any app or go on your app store, on Google Store, on your Samsung phone, whatever that is, right? Put in mileage tracker. Something is going to come up. I know that, something will definitely come up. I don't want to recommend any names, but anyways, you can keep track, and those apps have a thing where you can actually track your miles, right? It has GPS capability. It'll ask you, can we turn on your GPS? Can we track your miles? When you open the app, most of them, you swipe right, personal, swipe left, business, and then you quickly put in, within literally, it probably takes maybe 15-20 seconds, right? So literally put in what's your business purpose of the trip and so forth. So keep track of your miles if you're using standard mileage rate, right? And later on, we're going to talk about exactly hey, well, does it make sense for me to use standard mileage, or should I use the actual method, right? We're definitely going to get to that. But that's the standard mileage rate, okay? Now, if you are operating as a single member LLC or a sole proprietor, right? So what do you do then? It's very simple. You just calculate the mileage on your personal return. Bam, you take it as a deduction. But if you are a corporation owner, such as an S corporation or a C corporation, you definitely need to make sure that you reimburse yourself for this expense. So how does this work really, right? So again, most of you are S corporation owners, right? And most of you that are watching this video are driving your own vehicle. And now you're like, Boris, you're giving me another job to do. I'm a soccer dad. I'm a soccer mom, right? Now I've got to keep track of this. Promise you it's pretty easy, all right? What you have to do is calculate your mileage on a monthly basis. You keep track of your miles with your app, like we talked about, right? Keep track of the mileage. Once you have a certain amount of miles, so let's say it's 1,000 miles, right? 1,000 miles times 62.5 cents, right? Whatever that is, the business writes a check to you as a reimbursement for that, okay? Don't pay out of the business for your gases if you're using standard mileage rate, for your insurance. Don't pay for your maintenance, right? Taking you to the mechanic, registration fees. Don't do that, okay? What you want to do is that reimburse yourself for the mileage method, if you're using the standard mileage rate, right? Bam, again, check from the business to the personal. Business gets to pick it up as an expense. You personally do not pay any income tax, and because you properly have reimbursed yourself. Okay, so you want to make sure you follow these methods. All right, awesome. Now, what is the actual expense method? Well, ladies and gentlemen, the name kind of speaks for itself. You can deduct the actual expenses. Okay, again, that the actual expenses that you use for the car. So for example, right? For example, now I want to go back just for one second. I want to go back here for the standard method. The IRS says not only to keep track of your business mileage, but also keep track of your personal mileage. Now, obviously, that could be a daunting task, right? So what usually is done at the end of the year, your car odometer had 80,000 miles, right? You just write that one number down. At the end of the year, it's 90,000. So you traveled 10,000 miles in total. So IRS want to know, what did you travel in total, right? That's 10,000 miles. Then how much was it for the business? And you use that rate to multiply by the business mileage, okay? By this reimbursable mileage, okay? But you need to keep track of the total. Why? Because it actually becomes important in this next slide right here. What is the actual expense method? The IRS says, all right. You don't want to use our standard mileage method. No problem. You can actually reimburse yourself for the expenses that you incur. So if I drive right down, stop at a mobile gas station, fill up my trunk, and I've got a receipt, $50. Actually, my gas bill, guys. I'm a soccer dad, okay? Proud soccer dad right here. I drive a minivan, proud minivan driver. Don't really like it that much. I feel like it has a tail, right? When I drive it, so I prefer my SUV. When I'm alone, I'm just driving the SUV. When I'm with the kids, yeah, soccer dad. Anyways, so what was I saying? Oh yeah, last time I went to the gas station with a minivan, guess what? $100. My gas bill was $100. Okay, $100. Okay, cool. Now, so anyways, the IRS says you can actually reimburse yourself for actual expenses. Like, oh, okay, awesome. How do I reimburse myself for my gas then? It's $100, but I also use personal. For personal, so the IRS says, all right, I need you to keep track of what was the total miles you driven for the year. And you obviously know that because that is easy to calculate, right? What do? You take the beginning miles and the ending miles, 80, 90, 90 minus 80, you've got 10,000 miles. Then the IRS says, how much did you drive for the business? Because you kept track of your expenses using your cell phone, right? What happened? You ended up with the tracker, right? And let's say in our example, you use the car for the business 3,000 miles. So 3,000 minus divide by 10,000, that's 30%. 30% of your expenses are now deductible dollar for dollar. So if you filled up gas, you paid for insurance, you took the car to the mechanic, you paid for registration, all of those expenses are deductible 30%, right? Why? Because you drove an overall 10,000 miles. You out of that 3,000 was for the business. 3 divided by 10, that is 30%. That means all expenses are now deductible 30%. Okay, that means that again, all these expenses can be reimbursed to you. Do not use business credit card versus personal credit card. Oh yeah, I'm going to Staples. Oh, I have to fill out for $50, but all this time you used for personal, and now you're driving for Staples and you want to fill up and you put on a credit card, that becomes a problem. Okay, so what do you want to do instead? Reimburse yourself. IRS allows you to reimburse yourself. Okay, so reimburse yourself. Remember, this is a personal vehicle. The title of the car is not under the business name. Okay, the title of the car, the insurance is not under the business name. Everything under you personally. Okay, keep the two things together. So what do you want to do? Reimburse yourself. So by the end of every month, you put together your list of receipts, right? I keep receipts in the what do you call it? In the car, what's that thing called, right? That day where you put your hand on or whatever. Anyway, so that's where I keep receipts. At the end, you can kind of add it up and how much miles you use that, the percentage wise, bam, and just reimburse yourself, right? Done deal. That's how you can reimburse yourself on a monthly basis. That is the actual expense method. Now, the question really becomes, right? The question really becomes, when does it make sense for me to switch, right? Should I switch, right? So let's say you were using actual method, right? Standard mileage method, and now you want to switch to actual or vice versa. And which one of them does it really make sense for you to use, right? So here's the thing, right? First of all, you should know that you are allowed to switch methods that you use as a deduction, right? So for example, you were using a standard mileage rate this whole time, and now your car expenses went up. You start using the business much more. You start using the car much more for the business. Now you're like, hold on a second. You quickly do calculations, or you do those calculations with your tax planner, right? Ladies and gentlemen, what do I always tell you? If you have a tax preparer, you do not have a tax planner. Every day you are overpaying in taxes, right? Stop paying your ignorance tax, okay? Stop paying your ignorance tax, right? You need to make sure you plan for these things and you know exactly what you are doing. Now, are you allowed to switch from standard to actual? The answer is yes, you're allowed to switch from standard to actual. Does it make sense? Is when you need to start doing some tax planning for yourself, okay? So, for example, and in my personal experience and professional opinion, right, you should consider switching from standard to actual when you're using more than 50% of your car for the business. There's various reasons. Number one, the deduction for your car will be much more. And number two, if you bought the car and you haven't leased it and you financed it, well, guess what? If you're using it more than 50% of the business, you can get better depreciation deduction for yourself. Okay, you can actually depreciate. Your business can reimburse you, the business owner, for those depreciation expenses, right? So you want to make sure you do that analysis. But let's say you've been using an actual method, and now you want to switch back to standard. The IRS says no, 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 no. Right? The IRS says no. If you're using standard, again, you can switch to actual, and if you're using actual, you cannot switch to standard. Okay, ladies and gentlemen, it's very, very interesting. Now, which method is better for you? That really depends. How much of the car you use for the business? Are you leasing? Are you financing? Right? Or you are using your old vehicle? If you're using your old vehicle, that is not a lease, and there's no way to depreciate it. It's been depreciated or whatever. It's just it's not that valuable, right? Some vehicles just they're cheap, right? For whatever reason, they're old. Then it could actually be that the standard mileage rate is better, but everybody's situation is different, so you should really, really plan for that. Okay, but IRS does give you two methods, and it is up to you to choose, but you've got to choose wisely. If you make a wrong decision at first, it will be maybe even impossible to reverse back, right? Because from actual, you cannot go back to standard. Now, oh wait, that's it? Oh wow, are we done here? I thought there was another slide. Okay, cool. So I did want to answer one question. That how do you switch, right? What is the best way to switch? It's very simple. When you're filing your taxes, you can just spontaneously choose to file taxes under the actual expense method and standard. That's it. But like I said, you cannot go back. But anyways, thank you so much for watching. If you haven't subscribed yet, every Tuesday, I release a tax planning strategies video to help you pay less in taxes. So go ahead, hit the subscribe. Make sure to hit the like if you like the video. I appreciate you all for watching. Till the next time.